Okay, guys, a very good morning to one and all. So, today we are going to start the discussion about the provision related concept. So, in the before class, we have completed the discussion of the types of accounts related to creditor, asset, expenditure account, and income account. We have discussed. So, once you want means you can go through the previous class and you can watch it further. If you are having any doubts, you can contact me, no problem. And once again, the asset and expenses will have which balance ma? Debit balance. And incomes and creditors will have which balance ma? Incomes and liabilities will have which balance ma? Credit balance. Okay, guys. So next put the heading provision. So can you say the general meaning of the provision? From the foundation onwards, we are listening about the provision for bad debts. So next, we have seen the provision for taxation like that. What is the meaning of provision? Keeping aside. So nothing but we can call it as savings. So from where we can save normally? From profits. In general also, in the Indian tradition, so in our family, a baby girl come into the picture means our parents are used to save in the form of gold. Why ma? Because in the future, at the time of doing the marriage, they will give that gold as a bribe, nothing but, and they will make them marriages. So that is the reason in a baby girl family, they will use to save the money in the form of gold. Nowadays, all the people are using to save in the form of gold. So we are seeing in nowadays the gold prices are moving forward and silver is rapidly going forward. So okay, so from where we are going to save means from the profits. Okay guys, generally we know. I think all the people know about the P&L account. Yes or no ma? Because already we have completed the CMA foundation. So imagine this is a P&L account. In the P&L account, debit side we used to record what ma? Expenses. On the credit side we used to record the incomes. Okay na guys? For example, imagine in the credit side we are having the 10,000. On the debit side we are having 5,000. So now this particular account is showing which balance ma? Credit balance, because credit side is more and debit side is less. If the incomes are more and expenses are less means we are going to get a profit, we are going to get the loss. We are going to get the profit. Which profit we are going to get in the P&L account ma? Net profit. So the net profit is equal to how much ma? Is equal to 5,000. So this is the normal picture. Okay na? How much the total ma? 10,000. Here also what is the total? 10,000. But from where we need to create the provisions? We need to create the provision out of the profits. If we are going to create the provision means our profit are going to increases or decreases? Decreases. Out of this 5,000 only, we need to create what ma? Provision. So nothing but I am putting a side of rupees how much means 1,000. From the 5,000, how much I am taking out ma? 1,000. So in order to decrease this profit, decrease this net profit, this 1000 where we need to record. This 1000 rupees I need to record on the debit side, I need to record on the credit side. Sir, in order to decrease this net profit, this 1000 rupees I need to record on the debit side, I need to record on the credit side. Once again I am saying that through the incomes profit will be more. Yes or no, ma? If the incomes are more means profit will be more. For example, if I add 1000 rupees extra here, how much I am going to get the balancing figure? 6000. So if the incomes are more, profit will be more. If the incomes are less, profit will be less. Okay na? Next, come to the expenditure point of view. If I put here 6000 rupees, what will be the balance, ma? 4000. That means if the expenses are more, profit will be less. So now, based on that estimate, this 1000 rupees I am going to record on the debit side. Are you going to accept it or not? Yes. This 1000 rupees I am recording on the debit side by the name called as what, ma? Provision. By the name called as what? Provision. So can you say the entry based on that? In which account we have recorded the provision, ma? So in the P&L account, which side we are recording the debit side? That means in a journal entry, P&L account must be debited, P&L account must be credited, P&L account must be debited. So what is the journal entry we are going to get, ma? P&L account debited to provision account. So what is the reason we are writing that particular entry means? For creation of provision out of profits. Guys, are you getting the point or not? So this is the overall meaning. So let us write first journal entry. So nothing but what is the meaning of provision, ma? Savings out of profits is called as a provision. No need to write this one. This is just for our understanding. So what is the first entry, ma? Creation of provision out of profits. The entry is equal to profit and loss account debited to provision account. Okay now? Okay. Let us take an example. I am linking this example with the bad debts in order to get more understanding. So now from now onwards, provision means provision for bad debts, you can imagine. So next one, okay, can you say the bad debts entry, ma? Already we have discussed, na? So what is the entry for the bad debts? Bad debts account debited to debtor account. So because of bad debts, which balance is going to decrease? Debtor balance is going to decrease. So bad debts account debited to debtors account. Okay, na? Okay. Generally, who said to create the provision, ma? So the normal outside, who will say to create the provisions means our elder people will say to make the savings. It will be useful for us. We have seen in the COVID situation, our savings only helped us very lot. Yes or no, ma? Without our savings, we cannot sustain at that point of time because nobody having any work. And the people of the rental houses or owners are God like that, they are not going to take the rents for us also. Yes or no? We have seen all the types of situations. So that is the reason we have to make the savings, or no need to make the savings, sir. We have to make the savings. So generally why we need to make the savings means, now in this current year we have got 5000 rupees as a profit. Now after reducing this one, how much we are going to get, ma? 4000. So out of this 5,000 only we have created what ma? 1,000 rupees as a provision. In the future, we may get the profits or we may don't get the profits. That is the reason we need to create what ma? Provision for future losses. Provision for future losses, future anticipated losses. So what is our anticipation ma? In the future, we may get a loss in the form of bad debts. That is the reason we are creating the provision for bad debts in the current year itself. Okay na? Okay. Normally, in the place of provision, what should be there ma? Bad debts. In the place of provision, bad debts should be presented. But we have created the provision na. With the name of provision, we are taking some part of incomes, some part of profits outside. So now, at the time of actual bad debts, we have to set off with the provision, or once again, we need to transfer to the P&L account. Already we have taken certain amount from the profits in the name of what ma? Provision for the purpose of bad debts. Okay now. In the future, we may get what ma? Actual bad debts. Yes or no? So imagine, let us take an example. My actual bad debts is equal to 1,000 rupees. I have created the provision. This provision for bad debts. This is the provision for bad debts. Okay, now let us imagine I have created 2,000 rupees provision for bad debts. So from where I have created the provision for bad debts ma? Out of profits already I have put aside. Now actual 1,000 was coming to the picture. Now this 1,000 actually we need to transfer to which account? P&L account, because it is a nominal account or what ma? It is a nominal account. All the nominal accounts will be transferred to which account ma? P&L account. Actually this bad debt should be transferred to P&L account only. But already we have set aside in the form of what ma? Provision. That is the reason this balance should be set off against provision. Without the provision means the bad debts balance can be transferred to which account ma? P&L account. So like that we need to understand. So the third point is bad debts written off. What is the meaning of written off ma? Cancelling of a balance. Okay. In how many ways we are having means? 2 ways. What are the 2 ways for the bad debts written off ma? Having the provision, not having the provision. So in the case of not having the provision, all the balance, all the nominal balances will be transferred to which account ma? Will be transferred to P&L account. So here also this one should be transferred to profit and loss account. So can you say the entry ma? So bad debt account is showing which balance ma? Bad debt account is showing debit balance. Okay. I will take a ledger format. You will get a more clarity. Imagine this account is called as bad debts account. Okay nama? So what is the entry we have recorded for the bad debts? Bad debts account debited to debtors account. So to debtor, that is equal to how much? We have taken example ma? 1,000 rupees. Sir, here there is no any another transaction is available in this bad debts account. So the closing balance should be transferred to which account ma? P&L account. If in case we have created the provision, we have not created the provision. We have not created the provision. Why sir? Because nominal account balance can be carried forward to the next year, cannot be carried forward amma. Cannot be carried forward. Nominal account balances cannot be carried forward. But the real account balances and personal account balances we can carry forward to the next year. Are you getting the point or not? So that is the reason, instead of putting the balance carried on, what we are putting here, we are putting the P&L account. Normally what we need to write, normally to balance, sorry guys, out of flow. What we need to write here, by. So normally what we need to write here, by balance carried on. But we can write this one here, we cannot write, we cannot write, because why sir? Because this is a nominal account. Generally we need to transfer to which account, P&L. Can you say the entry now? In the bad debts account, P&L account is debited or credited? Credited. So now in the journal entry, bad debts will be debited or credited, credited. So what is the entry now? Profit and loss account debited to bad debts account. So what is the meaning of this concept, Return of bad debts, creation of bad debts, return of bad debts. Okay, so write this one. I will discuss about what, having the provision then after. Completed. Okay guys, now in the case of having the provision, this balance we need to transfer to, we have to transfer to provision account. We have to transfer to which account, provision account. Why sir? Already for the purpose of bad debts we have recorded in the P&L account, we have not recorded in the P&L account. Already for the purpose of bad debts we have taken certain amount in the P&L account. But if you are transferring once again to the P&L account the bad debts, means it is a double time effect or single time effect, double time effect. That is the reason in the case of having the provision we should not transfer to the P&L account, but we have to transfer to which account, provision account. That means what is going to be here means, so imagine now this is called which account, bad debts account. So in the bad debts account already we have recorded what, to debtor account of rupees how much, 1000. Now this balance we need to transfer to, normally we need to transfer to which account, P&L account, but in case of having the provision means where we need to transfer, by provision account. So of rupees how much, 1000. Can you say the entry through this ledger account? So the entry will be provision for bad debts account debited to bad debts account debited to bad debts account. Provision for bad debts account debited to bad debts account. Okay, now how many entries we have discussed in total, 4 entries. In that one entry already you know, yes or no, what is the first entry, creation of provision. So creation of provision, we are creating out of the profits. So we need to record what ma? In order to decrease the profit, we have to record in the P&L account debit side. So P&L account debited to provision for bad debts account. So next, bad debts. What is the entry for the bad debts ma? Bad debts account debited to debtor account. And next one, so return of bad debts. So what is the meaning of return of bad debts ma? All the nominal accounts we need to return off or no need to return off? We need to return off. But we are here in this situation, we are having how many situations ma? Two situations. Having the bad debts, not having the bad debts. Having the provision, not having the provision. In the case of having the provision, where we need to transfer ma? Provision account. In the case of not having the provision, we need to transfer to the P&L account. So what is the entry for transfer to P&L account? P&L account debited to bad debts account. What is the entry for transfer to provision for bad debts account? For bad debts account debited to bad debts account. So like this we have learned how many entries ma? 4 entries. Now through this experience we are going to see what ma? Provision account. Which account we are going to prepare ma? Provision. So normally provision account is an asset or liability. Provision account is an asset or liability. Why it is an asset? Savings for future liability or future asset. We are going to save for the future losses. So that is the reason the provisions are called as liabilities. The provisions are not called as assets. So to conclude, the exact word they are going to use in the accounting terminology is called, provisions are called as contra asset account. Contra means opposite. Contra means what ma? Opposite. Asset. What is the opposite to the asset? Liability. So to conclude, provisions are created for future liabilities or losses. So that is the reason. So that provisions are classified as liabilities. Nothing but that is in the bracket you can write contra asset So you need to remember liabilities. What is the meaning of contra ma? Opposite. So this is an exact word they are using in the books. Okay na? Now the liability na, we have to decide. Sir, liability means we are going to have opening balance and we are going to have closing balance. Okay na guys? So divide into the two parts. Opening balance and a closing balance. Opening balance and closing balance. So for the liability we'll have which balance ma actually? Liabilities are going to have the credit balance. For the credit balance, opening balance will be on the which side ma? Opening balance will be on the credit side. And closing balances will be on the which side ma? Debit side. Simple ma. For the credit balance, opening balance will be on the credit side and the closing balance will be on the debit side. So what we need to write ma? Credit side 2 by balance brought down. So debit side 2 by 2. For closing balance, 2 balance carried on. 2 balance carried on. Sir, where we are going to identify the opening balance? The opening balance means already created. In the future, nothing but in the previous year they have created. So that means this balance, okay now, we can identify from This balance we can identify from trial balance. This balance we can identify from the trial balance, or in the examination they are going to give this balance. Must and should they have to give. If they are not giving the balance, means there is no opening balance. Are you getting the point or not? Now, so how to identify the closing balance? Means we need to calculate. So for the closing balances, we need to calculate. We need to calculate by taking base of opening balance. So what is the starting point here? By taking the base of opening balance. So here generally how to calculate the provision means, provision for bad debts means we have to calculate the provision amount on a percentage should be applied on the debtors. Okay na? So we have to apply the percentage on debtors. We have to apply the percentage on the debtors. So from debtors means net of bad debts. From debtors means what ma? Net of bad debts if you are not going to return off. Okay na? So here means after bad debts reduction, before bad debts reduction, after bad debts reduction. So if we take an example, we can understand, no problem. So okay na? If already bad debts reduced means we no need to reduce once again. Okay na guys? Okay. So now we are started the discussion of what ma? Provision for provision. So what is the meaning of normal meaning of the provision ma? Nothing but savings. Savings we are going to done out of profits. So if you create the savings, the profits will be reduces or will be increases some. The profits we are going to get reduced. In order to decrease the profits, where we need to record the provision ma? Debit side. So what is the entry for the creation of provision? Means P&L account debited to provision for bad debts account. Next, we already know the which journal entry ma? Bad debts. So bad debts account debited to debtor account. So next come to the bad debts written off. What is the meaning of bad debts written off? All the nominal account balances we have to close and we have to transfer to which account ma? P&L account. In the case of having the provision or not having the provision. In the case of not having the provision, so what is the entry we are going to record? P&L account debited to bad debts account. In the case of having the provision, what is the entry we need to record? So provision for bad debts account debited to bad debts account. And then after we have come to the conclusion that provisions are showing which balance ma? Credit balance, because those are assets or liabilities. Those are liabilities because we have created for the future liability or future losses. So we are going to conclude it as what ma? Provisions are called as liabilities. Liability will show which balance ma? Credit balance. So for the credit balance, opening balance will be on the which side ma? Credit side, and closing balance will be on the which side ma? Debit side. So credit side means by balance brought down. Debit side means what ma? To balance carried down. So next, how to identify the opening balance? Through the trial balance. How to identify the closing balance? We have to calculate the percentage on the debtors after reducing the bad debts. So if they are not reduced means we need to reduce. Otherwise if they are already reduced means no need to reduce. Directly we can apply on that particular amount. So now we are going to see which account ma? Provision account. So we can complete it. So next keep the heading provision account. So nothing but I am discussing from viewpoint of view of bad debts. Okay na? Okay. What is the starting point of this account, ma? Opening balance and closing balance. So where we need to record the opening balance? So just now we have seen by balance brought down. So where we are going to get this balance, ma? Nothing but trial balance. We can identify this balance from the trial balance. So or we can write the full form. Okay, then after, which side the closing balance will be there? Debit side, to balance carried on, we need to identify. Okay, na guys? So this is the closing balance, na? So where we need to transfer this one? We need to transfer to balance sheet or P&L account. Provision. This balance we need to transfer to balance sheet. Balance sheet. But actually which side we need to record? In the balance sheet, liability side actually. But accounting treatment is nothing but we have to reduce from the debtor balance. So in general, even though it is liability, we have to reduce from debtor balance. Normally liability means where we need to record, ma? In the liability side we need to record, but how the accounting representation will be there, ma? We have to reduce from the debtor balance. Okay na guys? So this is how we can understand. So next, then after, what are the points will come into the picture, ma? We have recorded the opening balance and we have recorded the closing balance. The opening balance we are going to identify from the trial balance, or in the question they will give directly for you. So now, what are the remaining points are there? We have seen how many entries, ma? First creation entry, next then after bad debts entry, then after bad debts to be transferred to provision account. What is the entry for bad debts transferred to provision account, ma? Provision for bad debts account debited to bad debts account. So this is the provision account or bad debts account? Provision account. So where we need to transfer, ma? So on the debit side we need to transfer to bad debts. Guys, okay na? To bad debts account. So next we are going to get the balancing figure is P&L account. So what is the entry for creation of P&L account? Creation of provision out of P&L account, ma? P&L account debited to provision account. In the provision account, which side? By P&L account. So generally this will be the balancing figure. Sometimes we may get this balancing figure on the debit side also. Okay na? So here also we need to call it as what, ma? P&L account itself. Okay na? Either from these two at a time we are going to see, or only one time, ma? We may get this one as a balancing figure, or we may get this one as a balancing figure. So let us understanding. Okay, I am going to remove this one. So see this one, ma? I am having a opening balance of 1000 rupees of provision, ma? And as per the requirement of the question, we have created 2000 rupees as a closing balance. Okay na? In my hands, how much is having, ma? Initially 1000, but they said to maintain how much, ma? 2000. So by way of seeing this, still how much amount of provision we have required? Still 1000. Okay na? Imagine while coming to the Hyderabad, in your hands you are having how much, ma? 1000 rupees. But the coaching fee we are saying it as 2000. So still how much amount we required? 1000. For whom you are going to ask? Your parents. Same like that, here we are going to ask the P&L account. Okay na? So in order to meet this 2000, which side we have to record the 1000 ma? Debit side. Are you getting the point? Same like that. And there is another option ma. So the opening balance is equal to 1000. In order to write off, here we are having the 2000. How much we required ma here? 2000 for the write off purpose. And we need to maintain 2000 as a closing balance. So how much amount we want in total? 4000. 2000 for the expenditure purpose of which one? Bad debts. 2000 for the closing balance. So still, but I am having only how much? 1000. Still, how much amount I am going to require? 3000. For whom I am going to ask? P&L account. P&L account will give. So this is called deficit balance. This is called as what ma? Deficit. In some of the situations, we may have surplus also. Let us imagine I am having the opening balance of 4000. Okay na? But for bad debts written off, I required only 1000 rupees. For maintenance of closing, I required only 2000. So how much amount is sufficient for me? 3000. 3000 is sufficient. But how much I am having? 4000. Still surplus, how much I am having? 1000. The 1000 we are going to give to whom? P&L account. In the case of deficit, we are going to ask the P&L account. So in the case of surplus also, to whom we need to give ma? I need to give to the P&L account. Nothing but you can write here what ma? This is a surplus. This is deficit. This is the balance required. Okay na guys? So like that you can understand. So normally if you create the account means you can understand very clearly. So this is how I am doing. This balance will be transferred to which account ma? P&L account. But this balance we need to transfer to which account? Balance sheet. But we should not disclose in the liability side. Where we need to disclose ma? We need to disclose in the we have to reduce from the debtors on asset side. Are you getting the clear picture ma? So this is how we are understanding which account ma? Provision account. So provision is a liability. Opening balance will be on the credit side and closing balance will be on the debit side. No need to find out what ma? No need to find out the opening balance because already they will give in a trial balance. So here come to the bad debts means the bad debts they will give in trial balance and bad debts they will give in adjustment also. Both the bad debts we need to consider. Only one bad debt means both the bad debts we need to consider. The amount given in trial balance plus the amount given in adjustment. Okay na? The amount given in trial balance we need to consider and the amount given in adjustment also we need to consider. Guys, are understanding it or not? So can you say anything presented in the trial balance means already recorded in the books of accounts or already not recorded in the books of accounts? If any item available in a trial balance means already we have recorded the journal entry, journal to ledger, ledger to trial balance. If anything appear in the adjustment means we have not recorded that particular item in the books of accounts. So that is the reason that amount is appearing on the adjustment. So the any amount as a bad debt, the value appearing in the adjustment means that amount we have not reduced from the debtor because which entry we are not passed? Bad debts account debited to debtor. That entry if we have already passed in the books of accounts means already debtor balance adjusted or not adjusted? Adjusted. But if anything showing in the adjustment means what ma? That particular entry we have not passed. That is the reason the balance of the debtor is reduced or not reduced? Not reduced. We have to first reduce the bad debts given in adjustments and then we have to apply the percentage on debtors in order to identify what ma? Closing balance of the provision. Guys, are you getting the point or not? So this is the overall picture about the provision. And next, if what we have to see ma? We have to see the P&L account. In the P&L account, deficit means which side we are going to get the provision ma? Deficit means nothing but what ma? Balance required means which side? Debit side. So what we need to write here? To provision. Amount required means to provision account. In the case of surplus means which side we have to record ma? Credit side by provision account. So but most of the times what will be there? Amount requirement only will be there. In the case of, even though if you get the balancing figure in the provision debit side also, you need to worry or no need to worry? No need to worry. It will be happen or it will not be happen, amma. It will be happen. So this is a surplus situation. So only 0.1% we are going to see this situation. Okay, now guys. So this is how we have done the total picture. Let me take an example and let me revise all the things you can understand very clear manner. So let us put the example number 1. So let me take a trial balance. So what is this one ma? Trial balance. So these are the particulars TR and CR. Okay now. So what are the things we are going to have ma? So provision balance is appearing in the trial balance. Provision balance will be available on which side? Debit side or credit side? Credit side, because credit balance means credit side, debit balance means debit side. So let us take an opening balance of 10,000 rupees, and next I am going to have the debtors. So debtors of rupees 1 lakh. Okay nama. And next bad debts. Bad debts is a loss, nothing but expenditure. Which balance ma? Debit balance. So I am taking it as 10,000. I am taking it as what ma? 10,000. So let me take an adjustments. In the adjustment, they have given only 1 point ma. So provide PBD at the rate of 10% as a closing balance. So the amount available in the trial balance of this 10,000, we are going to consider it as opening or closing amount. So this is a opening balance. And the amount which we are going to identify, we have to apply this 10% on the debtor or bad debts on the debtor. So we need to apply on the 1 lakh or 1 lakh minus 10,000. On the 1 lakh we have to apply, because so this one recorded in the trial balance means already we have passed the entry called as what ma? Bad debts account debited to debtor account. Already we have reduced this 10,000 from the debtors balance. After reduction of 10,000 only, how much we are getting ma? 1 lakh. So directly if you apply this 10% on the debtor value of 1 lakh, how much we are going to get? 10,000. So 10,000 is the closing balance and 10,000 is the opening balance, unfortunately. Okay na? Next, then after this bad debts, where we need to transfer ma? Normally we need to transfer to which account? P&L account. But now we need to transfer to which account? Provision account. Okay na ma? Because having the provision or not having the provision? Having the provision. So let me clear this one. This is provision for bad debts. Okay na? Please take an example. We can prepare what ma? Provision for bad debts account. Okay, na? So which account we are going to prepare ma? Provision for bad debts. Only how many items are going to appear ma? 4 items, that's all. So what is the starting point ma? What is the starting point ma? Opening balance. So opening balance will be on the credit side. Buy balance brought down, and closing balance will be on the debit side. To balance carried on. Sir, opening balance we need to calculate or no need to calculate amma? No need to calculate the opening balance. So how much is the opening balance ma? 10,000 already we have got from trial balance. So nothing but given balance is equal to how much ma? 10,000. So next, closing balance we need to calculate or no need to calculate? We have to calculate. We can apply this 10% directly on the 1 lakh rupees because the bad debts which they have given in the trial balance already reduced from the debtors. No need to reduce once again. So that means how much ma? 1 lakh into 10%, that is equal to how much? Once again this is also 10,000. Okay nama? So next, the bad debts given in the trial balance how much? 10,000. Is there any amount of bad debts available in the adjustment ma? No. So the bad debts of this one we need to transfer to which account ma? We need to transfer to provision account. Currently this bad debts is showing which balance? Debit balance. In order to decrease this balance, which side we have to transfer? Credit side. On the debit side, what is the thing is going to get? The provision balance is going to decrease. The provision balance is available on which side ma? Credit side. In order to decrease, we have to transfer to which side? Debit side. So what is the entry ma? Provision for bad debts account debited to bad debts account. So but we are creating which account ma? Provision for bad debts account. So 2 by amma 2. So 2 bad debts. That is equal to how much ma? 10,000. So this one also 10,000. So if you close this account, how much more? 20,000 and 20,000. The balancing figure of 10,000. What is the meaning of this one? The balancing figure of 10,000 is nothing but what ma? Amount which we have to required. So we are going to take from P&L account. So 2 by amma by P&L account is a balancing figure. Completed amma? Okay, next in the P&L account which side ma? So let me create the P&L account also. In the P&L account, to PBD account, how much ma? 10,000. Yes or no ma? In one account, credit means another account what ma? Debit, because we are going to follow the touch concept. Debit will be in another account of what ma? Credit. So same like that. So next one. If you see the bad debts account, how it will be ma? So what is the entry you have passed ma? Which entry you have passed? Bad debts account debited to debtor account. So to debtor, how much ma? 10,000 na. This 10,000 we need to transfer to which account? PBD account. So by provision for bad debts account, that is equal to how much ma? 10,000. Already we have discussed ma. That is the reason I'm moving forward, that's all. So 10,000 and 10,000. Now this particular account is showing which balance? Zero balance. Okay now. And next, coming to the balance sheet. In the balance sheet, how we are going to appear, ma? So debtor, what is the debtor value, ma? 1 lakh. So debtor value is 1 lakh after reducing the bad debts. Once again, no need to reduce the bad debts here. So minus provision for bad debts, the closing balance, ma. Which balance? So we should transfer this one. Okay na? This one to the balance sheet. Even though that is a liability, which side we have to be reduced, ma? We have to reduce from the debtors. So minus provision for bad debts. How much, ma? 10,000. So what is the closing balance, ma? 90,000. So like that we have to be disclose in the balance sheet. Completed, Rama. So this is how we have completed what, ma? Example number 1. So next we are going to see the example number 2. Okay, in the example number 2, once again I am taking what, ma? Trial balance. Imagine this is a trial balance. Particulars, debit and credit. You know, ma, debit side what we are going to record? Expenditure and assets. Credit side we are going to record incomes and liability. From here the modern approach come into the picture. Okay na? So this is the base for taking the modern approach also. So expenses and assets, here incomes and liabilities. Okay, so first I am going to write the PBD. The PBD will show which balance, ma? Credit balance. So the amount I am going to take 8,000 rupees. So next one, debtors. So debtor is an asset, na? So debtor is an asset. So which side, ma? Debit side. Let me take it as 1 lakh. And bad debts, here 5,000. Added here how much, ma? 5,000. So in the adjustments, they given the two items as a adjustment. So first one, bad debts at the end of the year, or we can call it as further bad debts also, is equal to 10,000, and you need to create PBD at the rate of 20% on closing debtors. On closing debtors. So please take a note of it. We can discuss the solution. We can prepare the provision account, bad debts account, and all the things. The same concept in the examination prospect also I need to say na, minimum 2 marks ma. Minimum I am saying. Minimum 2 marks MCQ they will ask. Or they may ask you 7-mark question. Okay nama. So minimum 2 to 7 marks. The weightage of this concept. Okay nama. So next, so the solution. First we need to prepare what ma? We are going to prepare the provision for bad debts. So what is the opening balance ma? Opening balance we have got from, we are going to get from trial balance. How much ma? The opening balance they have given in the question itself. How much? 8,000 rupees. So buy balance or to balance ma? Buy balance. So because this account is showing the credit balance, so buy balance brought down, that is equal to how much ma? 8,000. So next, closing balance will be on the which side ma? Opening credit side means closing will be on the debit side. So to balance carried on. Okay ma. Now we need to calculate or they have given in the question we need to calculate how much percentage ma? 20% on the closing debtors. So here, if the bad debts presented in the trial balance means already reduced in from the debtors, because which entry we have passed ma? Bad debts account debited to debtor account. That means already debtor balance reduces or not reduced? Reduced. Through which bad debts we have reduced ma? To bad debts given in trial balance. But the bad debts given in the adjustment means we have passed that entry or we have not passed that entry. We have not passed. So first we have to reduce these bad debts from debtors and then we have to apply 20% on the debtor value. So 1 lakh minus how much ma? 1 lakh minus 10,000 into 20%, 18,000. Guys, okay now. So next one. Which bad debts we need to transfer to provision account ma? The only bad debts of trial balance are bad debts of adjustment also na. Both the bad debts. So 5,000 plus 10,000. Totally we need to transfer to which account? Provision for bad debts account. We should not transfer to P&L account in the case of having the provision. What is the entry ma? Provision for bad debts account debited to bad debts account. So to bad debts account. How much ma? 10,000 plus 5,000. So the total is equal to 15,000. So can you say the balancing figure ma? So here the total is equal to how much? 33. The total is equal to 33,000. What is the balance ma? 25,000. So where we need to transfer this amount ma? P&L account. We need to take or this is having a surplus. We need to take the amount from the P&L account because the balance which we are not sufficient. Okay na? So next, complete ma? Prepare this one. We can discuss the balance sheet, P&L account, bad debts account, debtor account. This is the famous adjustment in the final accounts also. And there is another adjustment called as managerial remuneration. We can discuss in the next class, no problem. Okay, guys. So next, let us prepare the debtor account first. Okay. What is the debtor opening balance given in the trial balance? The debtor balance is equal to how much? 1 lakh. Already 5,000 adjusted, but 10,000 adjusted or not adjusted? Not adjusted. So the balance will be on the which side? Debit side. To balance brought down is equal to how much? 1 lakh. What is the entry for the bad debts? Bad debts account debited to debtor account. That means in the debtor account which side? Credit side. By bad debts account, that is equal to how much? 10,000. So what is the closing balance? 90,000 is the closing balance. So balance we need to transfer to balance sheet or P&L account. Balance sheet by balance carried on. Okay now. So next come to the bad debts account. So what is the balance of the bad debts? The bad debts account balance they have given in the trial balance is equal to how much? 5,000. So debit balance or credit balance? Debit balance they have given. How much? 5,000. So normally balance will not be there, but still existing or not existing? Existing. What can I write here? To balance brought down. That is equal to how much? 5,000. And again we have passed the entry of bad debts. What is the entry? Bad debts account debited to debtor account. So to debtor by debtor. To debtor account, that is equal to 10,000. What is the total balance? So the total balance of 15,000, where we need to transfer? We need to transfer to P&L account or provision account? We have to transfer to the provision account because having the provision. So what we need to write here? To PBD account, nothing but provision for okay, out of flow by PBD account. Okay guys, here by PBD means in the PBD what? Two bad debts. Already we have recorded, we have not recorded. Already we have recorded. So this is how. So next what we need to prepare? P&L account and balance sheet. Completed this one. So in the P&L account which side? Debit side. What we need to write? To PBD. So what is the balancing figure in the PBD amount? PBD account 25,000. Here by PNL means in the PNL to PBD. Okay, na? This is called as extract because only one or two items are there. So next one, balance sheet. In the balance sheet, debtor balance. What is the debtor balance we are having, ma? 1,90,000. Debtor balance we need to have 90,000. So directly we prepare the account, or we can show like this also, no problem. So 1 lakh. What we need to reduce, ma? Bad debts. Given in adjustment, trial balance, ma. Given in adjustment, trial balance already adjusted, already not adjusted, already adjusted. So 10,000, 5,000, 10,000. So how much we are going to get, ma? 90,000. On this only we are creating what, ma? Provision also. So minus PBD closing balance or opening balance? Closing balance. So what is the PBD closing balance, ma? Nothing but 18,000 we have to transfer to balance sheet. So 18,000. If we reduce 18,000, how much we are going to get, ma? 72,000. Okay, na guys, this is how we have completed the total discussion. Okay, na? So let me open certain questions we can solve. Just give me a second. Bad debts recovered will not be come into the picture. What is the entry for the bad debts recovered? Bank account, cash or bank account debited to bad debts recovered. Okay, now that is the reason bad debts recovered will not be shown in debtor account, will not be shown in bad debts account. Okay, now but in the income and in the P&L account, which side we are going to show? We are going to show in the credit side, and the bank balance we are going to get in the balance sheet asset side. Okay, now guys, so we can write the note point. Just a second. Just a second, guys. The tab is having a corrupted. Okay, ma. Let me write a note point, ma. This adjustment also they will ask, they will include in the question, but the students may get what, ma, confusion. So note point about bad debts recovered. The entry will be cash or bank account debited to bad debts recovered account. Cash or bank account debited to bad debts recovered account. This bad debts recovered account will be shown in, will be transferred to P&L account, or we can prepare like this: bad debts recovered account, and next one what, ma, bank account. Okay, now in the bad debts recovered, to by amma, by bank. Let us take an example of 10,000 rupees. Okay, in the cash account, to bad debt BD recover. Can I write like this? To BD recover, that is equal to how much, ma? 10,000. Okay, now this is a nominal account, na. This balance we need to carry forward, we need to transfer to P&L account. We need to transfer to P&L account. So to P&L account. Here to P&L account means in the P&L account by bad debts recovered. But this 10,000 what we can do? We can carry forward, we cannot carry forward. We can carry forward. So carry forward means by balance carried on. Should be transferred to which account, ma? Should be transferred to balance sheet. Okay, na? So next, in the P&L account, credit side, by bad debts recovered account is equal to how much, ma? 10,000. And in the balance sheet, cash or bank, how much, ma? 10,000. Okay, na? There is no impact in which accounts, ma? There is no impact in bad debts account. There is no impact in debtor account. But there is an impact in P&L and balance sheet. Hmm? Okay, Nama. So till now we have discussed the total concept from the bad debts point of view. Okay, now we need to refer what, ma? We need to do certain questions. Okay, now questions. See this question, ma. This is an exam question, the past question, repeated question. As an MCQ also they may ask, or they may ask for 7-mark question. Mrs. and Co. had a provision for bad debts of rupees how much? 13,000 against their books debts on 1st April 2015. If anything they have given the 1st April means that is called as opening balance. So nothing but this is the opening PBD, that is equal to how much ma? 13,000. During the year ended 31st March 2022, 8,500 provide what ma? Irrecoverable, and it was decided to be maintained the provision for bad debts how much ma? 5% on the debtors, which is stood at how much ma? 3,90,000 before rate of bad debts. That means what ma? Bad debts reduced or not reduced? Bad debts not reduced from debtors. Which bad debts are not reduced from debtors ma? 8,500 provide what ma? Recoverable la? Irrecoverable la? Irrecoverable. So that is the meaning, nothing but what ma? These are the bad debts. Adjusted here, not adjusted here. From these 3,90,000 not adjusted, because what is the mention ma? Before return of bad debts. Here return of means transfer to P&L account or not transfer to provision account ma. Our intention, understand the language, okay nama. What they are saying ma here, that a particular 8,500 not written off from this debtors means that particular entry they have passed, they have not passed, they have not passed. What is the entry they have not passed ma? Bad debts account debited to debtors account. That means this one given in adjustment or given in trial balance, given in adjustment. That means we have to convert this information into our examples. Okay now, if you convert this information into our examples means easily we can get through. Are you getting the point or not? So just what they are asking ma, prepare the provision for what we need to prepare ma, provision for bad debts account for the year ended 31st March 2022. So easier what ma? Easy only. So easily we can do. So let us prepare what ma? Provision for bad debts. So we can keep like this only. Illustration number 4. In the chapter of trial balance, we have given these questions. Okay na? Page number. There may be a changes in the page numbers because I am going to update the book. Okay. So provision for bad debts. So or you can keep the question number 1, no problem. Which account we need to prepare ma? Provision for bad debts account. Okay na? What is the opening balance? Which side we need to record the opening balance ma? Credit side. Completed shall I start? Okay. How much ma? By balance brought down. So how much they have given? They have given the 13,000 as a opening balance. So that is equal to 13,000. And come to the closing balance ma. To balance carried on. So closing balance, shall we directly apply this 5% on the debtor balance of 3,90,000 ma? No, because first of all what we need to reduce? 8,500. So what is the debtor balance ma? 3,90,000 minus 8,500 into how much ma? Into 5%. That is equal to how much we are getting? 19,075. Okay, na guys? Okay. Next what ma? The bad debts we need to transfer to which account? Provision account or P&L account? Provision account. What is the entry ma? Provision for bad debts account debited to bad debts account. So 2 bad debts, that is equal to amount how much ma? Only one bad debt we are having, 8,500. So if you close this balance, how much we are going to get ma? 27,575. Okay na, by P&L account 14,575. Okay na, so this is the balancing figure. So we have completed this question. Okay na guys, we can go for next question na. Okay, if you want you can prepare what ma bad debts account and all the things like explain in the examples. So next one, on 1st April 2021 the balance of the provision for bad and doubtful debts is equal to how much? 13,000. And again they have given what ma? 1st April only. Again they have given what ma? 1st April. So what is the opening? 1st April means opening balance or closing balance? Opening balance. How much ma? 13,000. The bad debts during the year, amounts during the year means what ma? 21, 22. That means we are following calendar era, we are following the financial era. We are following the financial year. Okay na? The opening on 1st April 2021, closing on 31st March 2022. For how much ma? 9,500. So during the year means already we have adjusted, like that we have to assume. Okay na? So next one, the sundry debtors on 31st March 2022. That means what ma? On the closing date stood at how much ma? 3,25,000. Okay na? Out of those debtors, 2,500 are bad and cannot be realized. Okay na? These are the closing bad debts. These are the closing bad debts. That means not adjusted. Yes ma. This 2,500 is not adjusted on from the debtors, but during the year bad debts of 9,500 adjusted or not adjusted? Adjusted. That means this 9,500 given in trial balance, this 2,500 given in adjustment. Next one, the provision for bad and doubtful debts is to be raised by how much ma? Is to be raised by 5%. So can anyone of the class, can you say the amount of closing balance of the provision? The amount of the closing balance of the provision, directly we have to apply that 5% on 3,25,000, or we have to reduce 2,500 from the 3,25,000 and we have to apply. We have to reduce 2,500 from 3,25,000. So how much we are going to get ma? 3,22,500. So from the 3,22,500 into how much percentage we have to apply? 5%. That is equal to how much? 16,125 will be the closing balance. We know the opening, we know the closing. So the total bad debts we have to transfer to the provision. Only bad debts given in trial balance we have to transfer to the provision. The total bad debts we have to transfer to the provision. What is the total bad debts ma? 9,500 plus 2,500, that is equal to 12,000. We have to transfer to the provision for bad debts. What is the entry ma? Provision for bad debts account debited to bad debts account, and the balancing figure we are going to get the P&L account. So prepare the necessary adjustment entries for the bad debts and its provisions on 31st March 2022. Prepare necessary ledger accounts. Show the relevant items in the income and in the P&L account and the balance sheet. That means we have to prepare 3 accounts. Provision for bad debts account, P&L account and balance sheet is sufficient. Okay na? Okay. Or if you want you can prepare the data account also. So this is the question number 2. Okay, ma. First I am going to prepare the provision for bad debts. Okay, na, ma. The opening balance will be on the which side, ma? Credit side. By balance brought down. Can you see the amount, ma, here? 13,000. When coming to the closing balance, ma, debit side, to balance carry down. So how directly we can apply on 3,25,000? We have to reduce 2,500, amma. We have to reduce 2,500. So 3,25,000 minus 2,500 into 5%, amma. Into 5% is how much we are getting, ma? 16,250. 16,125. So the total bad debts we have to transfer to provision account. So provision for bad debts account debited to bad debts account. What are the total bad debts, ma? 9,500 plus 2,500. That is equal to 12,000. What is the total, ma? 28,125. What is the balancing figure? 15,125. So this is by P&L account, the balancing figure. Okay, na? So next we can prepare what, ma? P&L and balance sheet. So how we can prepare the P&L account, ma? Only extract only one item we are going to get. So P&L account 2 PBD by PBD, amma? 2 PBD. So 2 provision for bad debts. $15,125. And what we need to prepare, ma? Balance sheet. The balance sheet. Let me take a debtors first. What is the debtor actual closing balance, ma? Debtor actual closing balance is equal to how much? 3,25,000. From here, what we need to reduce, ma? First, we have to reduce the closing bad debts. So minus bad debts. What is the amount of closing bad debts? 2,500. How much we are going to get? 3,22,500. From here, what we need to reduce, ma? Closing PBD or opening PBD? Closing PBD. Can you say the closing PBD amount? 16,125. So minus PBD 16,125, that is equal to how much? $3,06,375. So this is the closing balance of debtor, will be disclosed in the balance sheet. Okay, Nama, are you getting the point? So this is how we have completed how many questions? 2 questions. So one last question, we can close, we can wind up the class. Next one. A company maintains its provision for bad debts, how much ma? 5%, and provision for discount on debtors, how much ma? 2%. Here in this situation, they have given the two provisions, provision for bad debts and provision for discount on debtors. Same like a provision for bad debts, provision for discount on debtors ma. But provision for bad debts is created for the risk of bad debts. But the provision for discount on debtors is created for the risk of discount allowed. So discount allowed is also lost now. So to cover the risk of discount allowed, we create the provision for discount on debtors. To cover the risk of bad debts, we create the provision for bad debts. So in the place of bad debts, now what is going to get? Discount allowed. Opening balance will be on the credit side. Closing balance will be on the debit side. In the place of bad debts, what we are going to get? Discount. So the same balancing figure is called as what ma? P&L account. Are you getting the point ma? But while calculating the provision for discount on debtors, first we have to calculate provision for bad debts, and then we have to calculate provision for discount on debtors. How it will be means? So till now, for calculation of provision for bad debts of the closing balance, what are the things we need to reduce ma? First we will take the debtor as the base. If the bad debts not reduced means, first we are going to reduce what ma? Further bad debts. Okay na? Now after that, what is the value you are going to get? Okay na? On this value we are going to calculate what ma? On this value we are going to calculate the PBD, provision for bad debts. So from here we have to reduce what ma? We have to reduce PBD, provision for bad debts account. After that, how much amount we are going to got na? On this amount you have to calculate what ma? On this amount you have to calculate provision for PDD, provision for discount on debtors. On this amount we are going to calculate the PBD. On this amount we are going to calculate the PDD, provision for discount on debtors. So we are going to get this one. We have to reduce. Now ultimate the closing balance will be appear in the balance sheet. Are you getting the point ma? Okay na? So the same concept will be available. Shall we start? Okay na? So see my bad debts of 2020 they have given, and 2021. So 2020 the bad debts is equal to how much ma? 800. Discount allowed is equal to how much ma? 1200. And the sundry debtors before providing all bad debts and discount. That means first of all we have to reduce these bad debts. First of all we have to reduce these bad debts. Now how it will be means discount allowed given na? So here itself, after the bad debts, we have to reduce the discount also. After the bad debts, we have to reduce what ma? Discount, and then we have to calculate PBD, and then we have to calculate what ma? PDD. Are you getting the point? So this is the process. So 60,000 we have to reduce 800 rupees, and we have to reduce 1200. How much we are going to get ma? 58,000. How much we are going to get? 58,000. On 1/1/2021, 1/1/2021, the provision for bad debts and the provision for discount on debtors had a balance of rupees how much ma? 4,550 and 800 rupees. But see here what is happening ma? The given 2020 and 2021 na? Okay na? But they are given here opening balance for the 2021. So it is not possible. So let me change this one. So change this year to what ma? 1/1/2020. Now it is clear. We have got the opening balances. We are going to identify what ma? Closing balances. The 2020 closing balance will be the 2021 opening balance. So let me do one thing. I will complete what ma? 2020 concept. So you have to complete what ma? 2021. So here the calculation difference only is there. Okay now? So easily we can go through. Okay. What is the process ma? From the debtors, we have to reduce first bad debts, we have to reduce discount, and then we are going to get what ma? The balance, on that balance we have to calculate the PBD. And next, after reducing the PBD balance, whatever the amount we have got now, on that we have to calculate what ma PDD. After reduce, what we need to reduce ma after PDD, and then we are going to get the balance. This is the balance will be appear in the balance sheet. Okay now, if you do this working note, easily we can prepare two types of accounts: provision for bad debts and provision for discount on debtors. Okay now. So question number 3. Provision for bad debts account. Next, which account ma? Provision for discount on debtors. We have to do certain working note. Provision for discount on debtors. Provision for bad debts. Okay ma? What is the working note we have to do ma? Working note number 1. Calculation of working note number 1, calculation of closing balance of debtor to be shown in balance sheet. To be shown in balance sheet. Okay nama? So how many prepare the 3 columns: particulars, so 2020 is one column and 2021 is another. But I am going to prepare the accounts for 2020 only. You have to prepare the accounts for 2021. Okay, what is the base ma? Debtors. What are the debtor values here? 60,000 and 42,000. 60,000 and 42,000. Next, then after, from here onwards, first we need to reduce bad debts and discount allowed. So what is the amount of bad debts ma? 800 and 1500. And then after, what is the discount allowed ma? 1200 and 500. $1,200 and 500. So next, and up to here, how much we have got here ma? So 60,000 minus 2,000, that is equal to 58,000. And next 42,000 minus 2,000, that is equal to 40,000. So from here onwards, on this 58,000 or 40,000, first we have to reduce what, sir? First we have to reduce the provision for bad debts. So we can apply the provision for bad debts on this amount. So that is equal to how much we are going to get? So minus provision for bad debts at the rate of how much, ma? The provision for bad debts is equal to 5%, and the provision for discount on debtors is equal to 2%. So at the rate of 5%, that is equal to how much we are getting, ma? That is equal to, we are going to get, just a second guys, 2,900 here. So how did we calculate this one? Means 58,000 into 5%. Here ma 40,000 into 5%, that is equal to 2,000. So if you reduce these amounts, we are going to get how much, ma? 38,000 here. Here 55,100. 38,000 and 55,100. On this amount, we have to calculate what, ma? PDD. So that is equal to minus provision for discount on debtors at the rate of 2%. So 55,100 into 2%, that is equal to how much, ma? 1,102. And here, ma, 38,000 into 2%, 760. What is the balance, ma? Where? Oh, okay. 37,240. Here, ma? 53,998. Okay, na? Now, what is the meaning of this 2,900 and 2,000, ma? Closing balance of PBD. What is the meaning of 1,102 and 760? Closing balance of PDD. Opening balances, as usual, we know. So let me finish this one. Okay. So first, we have to start this one. So please take a note of it, this one first. Okay, ma. Now we can prepare the accounts easily. Yes or no, ma? So let me finish first provision for bad debts, and we can finish the provision for discount on debtors. So what is the opening balance, ma? Which side we have to record the opening balance? Credit side. By balance brought down. What is the opening balance given in the question, ma? Just a second. 4,550 is for PBD, 800 is for PDD. So that is equal to how much, ma? 4,550. And we have calculated closing balance. Yes or no, ma? So two balance carried on. The closing balance of 2020 we have to take, ma. What is the closing balance of 2020? So this one, ma, this one, 2,900 is the closing balance. Okay, na? So again, this will be the opening balance for next year. Okay, na? So next one, which one we are going to get here, ma? Bad debts. What is the bad debts given in the question, ma? 800 rupees for 2020. Only 2020 we are preparing. Okay, na? Okay, what is the total, ma? You can write working note number 1 here. $3,700. Oh, here credit side is more, ma. 4,550. 850. 850 where we need to transfer, ma, PNL account. Right or wrong, ma, this one? Right only. Here in this situation we are having what, ma? Surplus. And again in the next year, for 2021, what will be the opening balance, ma? This 2,900 will be the opening balance, and the closing balance already we have calculated, or we have not calculated? Already we have calculated. So next we are going to prepare the provision for discount on debtors. Again the closing balance, which side, ma? Credit side. By balance brought down. How much they have given in the question, ma? 800 rupees. Next, two balance carried on. Can you say the amount of two balance carried on? 1,102. For next year, ma, 760. 1,102. So here for which purpose we have created the discount on debtors? Discount allowed or bad debts? Discount allowed. So here we are going to get the discount allowed. What is the amount given in the question, ma? 1,200 rupees. So can you do the balance? 1,200, 1,200 only, nama. What is the total? 2,302. 1,502. So where we need to transfer, ma? By profit and loss account. So this is the balancing figure. I have completed for which year, ma? 2020. Okay, na guys. So next one, a small point. Okay, let me give 10 minutes, ma. That's all. We can close the section. Sir, here on the debtors, we are going to apply the rate. Yes or no, ma? On the debtor, if you apply the rate, means what we are going to get? Closing balance of provision. Okay, we can take the PBD. Closing balance of PBD. Are you getting the point? In the next sum, what they will do means they will give the closing balance of which year, ma? Previous year. They will give the closing balance of previous year and the closing balance of debtor of previous year. Okay, ma. This is also they will give for previous year. This is also they will give for previous year. Till now, in any of the question, we have done how many questions, ma? 3 questions. Whether we have identified anything related to previous year, ma? We have not identified anything related to previous year. But why they are giving this information of previous year means in order to identify rate. Okay, ma? That is only the special point available in the next question. So they are not going to give the rate, but indirect hint they are going to provide what, ma? They will give the future closing debtors and they will give the future closing balance of PBD. So how we can identify the rate, ma? Now rate is equal to closing balance of PBD divided by closing balance of debtors. If you apply, what we are going to get, ma? Rate. Okay, na? So let me show you that thing. Please take a note of it. So to identify rate of PBD. This is a special point, ma. Okay, no? So see this question, by way of reading only you can understand. And here we have discussed all the previously only. They will give what, ma? Bad debts recovered also. We no need to confuse. Okay, na, ma? Whether it is having any impact on the bad debts, ma? There is no impact on the bad debts. On 31st/12/2020, sundry debtors and provision for doubtful debts is equal to how much, ma? 50,000 and 5,000. So they are given the balance of sundry debtors and balance of provision for bad debts on which date? On 31st/12/2020 respectively. During the year 2021. Sir, during the year 2021 means our current year is 2021. But they have given the balance of which year, ma? They have given the balance of 2020 means this is called as previous year. Which year we are going to follow? Calendar year or financial year? We are following the calendar year. So this is a previous year. This balances of 50,000 and 5,000 are going to call it as what, ma? Previous year closing balance of debtors and previous year closing balance of PBD. Then how we can identify the rate? 5,000 divided by 50,000, 50,000 divided by 5,000, 5,000 divided by 50,000 into 100. That is equal to 10% we are going to get. So during the year 3,000 of the bad debts written off on which date, ma? On 39/2021. Current year or next year, ma? Current year. So that means during the year means already adjusted or already not adjusted? Already adjusted. During the year means already adjusted. On an amount of rupees how much, ma? 400 was received on an account of debt which was written off as a bad in the last year. Okay, now as a bad last year. Okay, now we have written off some of the bad debts in the last year. Those bad debts we have received in the current year. So what is the meaning of this 400 ma? Bad debts recovered. Bad debts recovered will be available in the P&L account. Which side? Credit side. There is no impact in the debtor account and bad debts account, but the amount will be transferred to the balance sheet asset side. The 3000 are the bad. The 3000 already written off, already not written off, already reduced from the debtors. On 31st/12/2021, that means current year closing, previous year closing. Current year closing, the debtors left was verified, and it was found that the sundry debtors stood in the books of accounts is equal to how much ma? 40,000. Current year closing balance. Out of which a customer of Mr. X who owed how much ma? Who owed 800 was to be written off as a bad. That means what ma? This was to be written off means already written off happened. We need to written off. So was to be written off means we need to written off. That means further bad debts. This 800 given in adjustment, given in trial balance, given in adjustment. So easily we can overcome. What are the accounts you need to prepare ma? Provision for doubtful. The easy account. The only logic is we need to find out what ma? Whether they have given any rate ma? They have not given any rate. We need to identify. So how we can identify already we have discussed. So this is also I am giving the homework. There is no impact of bad debts recovery, already we have discussed. So this is the overall discussion about what ma? Bad provision for bad debts. So let me clear one thing. We have discussed about the clear concept about the provision. So we are going to create the provision as per the concept of prudence. Okay, na? That is only one point we have missed out. So prudence concept is also called as what ma? Conservatism concept. So write that note point. So write that one note point. What is the note point ma? Provisions are created as per prudence concept. PRUDENCE. Prudence concept. Okay, na ma? So that thing. Is there any doubts up to here ma? So this is the overall concept. So we can meet in the next class with a special discussion. Thank you. Have a nice day. Bye bye.